Welcome to the Techno Fundamental Report for September 25th. Well, the rich are getting richer, and it's really starting to spread where the top 1% of wealth is more than the bottom 50%. The top 1% now holds 5 times more wealth than the bottom 50%. And it's mainly because of the stock market and housing prices. So we're living in a pretty nice country where you can increase your wealth. Now, these other groups are going to have to just get with the program, start investing in the stock market. AI is making the tech sector more productive with fewer employees. So basically, we're seeing a big improvement in certain parts of the economy due to artificial intelligence. There are jobs being lost, but they're gaining jobs in the AI sector. Initial rate cuts tend to be bullish for the S&P 500. Only in 2001 during the dot-com bust and in 2007, which preceded the global financial crisis, did major indexes fall. So this shows, the initial cuts and what happened 12 months later. Well, really nice here. In 1982 was really, really good. 82, the market went up 30%. 12 months later. So cutting interest rates is a good thing for the stock market. How is the U.S. economy performing? Well, 3% growth rate on a quarterly basis. We had a slump here. The projection is for third quarter of this year up 3.1. So if we can keep the GDP growth rate up, we can really bring down our national debt. NASDAQ, I want to remind y'all of something that's called the power trend. The low is above the 21-day exponential moving average for at least 10 days. The 21-day exponential moving average is above the 50-day simple moving average for at least 5 days. The 50-day line is in an uptrend. The market closes up for the day. A power trend will usually end with the 21-day crossing back below the 50-day. Extra follow-through days are above the 21 days. So this is your 21 day and this is your 50 day, and we're still above it. So we are still in a power trend, which is very positive. This is a statistical indicator developed by Investors Business Daily. So you can say the same thing here about the S&P 500. Until that 21 day breaks down below that 50 day, the power trend stays in place. And you can see here, we've been really running since April the 7th. So it's getting long in the tooth, but we're still in an uptrend. Now, Ned Johnson, who was the founder of Fidelity Investments, was asked one time if he was on a desert island and he could only have one indicator, what would it be? And he said the 200-day moving average. So we use that. Here's the 200-day moving average for the S&P, and here's the NASDAQ. As long as you stay above that 200-day moving average, the primary trend is up. Now, as we can also see here, mortgage rates improving here. We're seeing a downtrend now in mortgage rates and really getting kind of close to making a new low. If it could break below 6%, we think that would be pretty darn meaningful, and it looks like it's heading in that direction. Young people need to buy houses. That's the bottom line. Okay, here's the aggression index where we're comparing the NASDAQ, which is technology, to consumer staples, which is ketchup and toilet paper. You can see here we're really getting hot, and we're actually kind of flattened out a little bit yesterday. The market did have somewhat of a pullback in the tech stocks yesterday, but as far as I can tell, the aggression index says stay aggressive. Now, on interest rates, we also have the 5-year Treasury yield continuing in a downtrend. Our power index, which we use to determine what we think the Fed's going to do, and as long as it's below zero, we think the Fed's going to continue to cut interest rates. The way this works is we take the yield on the Treasury, the 5-year Treasury, we measure that yield over the last 125 trading days, and you can see that yield has dropped 8.13% over the last 125 trading days. Oil prices are continuing in a downtrend. Now we're seeing a little bit of an upturn here, but this downtrend is pretty much in place. So we keep oil prices low. That'll be good for the economy. New lows. The new lows are primarily on the New York Stock Exchange. We look at this as a way to determine, are the sellers in control of this market or are the buyers in control? Right now, the sellers have dried up. You can see back here when the market made a low, the sellers were completely in control. We think that was the bottom of the bear market that started around 2021, and we're now in a bull market. ARK Innovation, this is a very aggressive exchange traded fund that got started back, around back in 1990, 2000 area, but it got really hot here because they had Tesla. And you can see the stock peaked, and it's been in a serious downtrend for basically 5 years. Well, it kind of looks like maybe we formed a base in here and we're starting to break out. So growth stocks are starting to look pretty darn positive. Now, we heard President Trump speak to the UN, United Nations, yesterday, and he really was pretty rough on them. And I think they need it, because if you look at their stock market, this is the Eurozone compared, I'm doing it as a ratio to the S&P 500, and the United States stock market has been beating the pants off the international markets for 20 years. Now, there's been a little bit of a recovery here, but really nothing meaningful. So I would continue to focus on the good old USA. Now, last but not least, let's remember demographics. The millennials have turned 35 in 2016. Now, when you're 35 years of age, those are your consumption years. That's where you're buying houses, having babies, so forth. That all peaks out when you turn 54. When you're 54, you're pretty much done with most of your consumption. You bought your house, you got your cars, kids are in college, so forth. So if you go back and look at where this has happened before, this was the bull market started in 1982. That was led by the baby boomers, the demographics of the baby boomers, the ones after World War II. And you can see that the stock market did incredibly well. They were 35 years old in 1981. Then in the year 2000, they turned 54. And look what happened. We went into a 16-year bear market is what happened. So demographics are important. And right now here in the United States, so you can kind of go back here and look at Europe for a minute, their demographics are terrible because they lost 2 wars. And they just haven't been able to get their act together since. So they don't have any kids. That's the problem. Japan, same situation. So realize that we are in a bull market, a long-term bull market, that I believe will be driven by favorable demographics here in the United States. So if you have any questions, please let me know. Thank you very much.